The biggest ETF conference in the world is underway in Hollywood, Florida. Let's get to our Bob Pisani, who's down there on site, as he always is. Hey, Bob.
Hello, Scott. Good to see you. I'm here with Dave Nadig, Chief Investment Officer at ETF Trends. Josh Brown, CEO of Ritholtz Wealth Management, both of them disguised as Italian film directors. Let's break down the big themes at Inside ETF this year, starting with the possible ripple effects of the coronavirus outbreak on global and emerging markets. And, guys, I think the important thing, Dave, so far, typical reactions, inflows into gold, inflows into treasuries.
Yeah, people playing defense. The thing people really shouldn't be doing is just dumping their emerging markets exposure because this is hit. It is an interesting time to think about getting China out of your portfolio. We do have an ETF for that, as you say, FRDM, the Alpha Architect Freedom 100. Basically, freedom weights countries. That means there is no China in that portfolio. Might be an interesting way to play it.
And, Josh, so far the reactions are pretty typical. And paralleling SARS, 13% decline in the Shanghai and SARS in 2003, about a 10% decline in China. But rallying today, you had a good point. We haven't had time to panic yet.
Yeah, no, I was on the plane yesterday. I totally would have panicked out, and now the Dow is bouncing back. So I feel like I missed my window to do something stupid.
There'll be another one.
So I want to touch on what Dave had to say about emerging markets, because I think it's really important. MSCI has allowed that China weight to go from 5% of the emerging market index all the way up to, what is it now, 20-something?
20-something, yeah.
20-something percent. It is a different emerging market index than it was even 3 or 5 years ago, and that's why you're seeing that volatility across the whole asset class.
Okay, big inflows still into ETFs. ESG is the hot topic this year. I think the big issue is, can we define exactly what it is? A lot of comments here. We don't know what it is. Everybody has a different definition. Are we going to finally quantify ESG, and are the flows going to increase as a result?
Well, the flows doubled over last year, so flows are coming in. I don't think we're going to ever agree on what it means, but luckily the industry will probably produce another couple hundred products, so you'll be able to pick and choose the one that's right for you.
It was a bit of a joke in the last couple of years. Everybody subscribes to the concept of ESG, but where's the money? All of a sudden, last year, the flows started happening. Is this a really legitimate thematic concept?
Yeah, no, I love ESG. It could be whatever I want on any given day, depending on who I'm talking to. ESG is very tough to do across the board, especially when you're working directly with households, clients like I am, because they all have different values and they all have different issues that are important to them. So how do I create an across-the-board ESG portfolio with ETFs that addresses the entire rainbow of causes and concerns? Really, really hard to do. You have to just draw the line somewhere. I think successful ETFs in this space are going to just be doctrinaire and say, look, this is what it means to us. It's either good enough for the masses or it's good enough for enough specific people that it'll find success.
The other hot topic is active management. Money is coming out of active management into passive, and now there's a vehicle to take active management mutual funds that are losing assets, bring them into the ETF space. Our attitude has always been, if you're a loser in the active management mutual fund, you're going to be a loser in the active management ETF space. And yet, this is the hot topic. Are we going to see big inflows this year?
We're going to see big
active managers are making a final stand.
You see big launches. I don't know.
Yeah, we're going to see a lot of launches.
Well,
some institutional money will definitely go into these products. It's going to map in from separately managed accounts into these products, but I don't think it's going to be something that takes over the industry overnight.
I would argue the biggest active ETF in the world is the SPY. It's run by committee.
Thank you.
It's essentially a momentum fund. This is nothing new.
Essentially the same thing.
Yeah, I mean, look, I think it's a solution in search of a problem.
Before we go, can we just show what Federico Fellini's shoes are right here? Because everybody's staring at these. Are LeBron Chinas? Is that what they are?
LeBron China Moons.
They're not even available. Nobody owns them except you?
You can have them in China. Actually, I should probably throw them in the ocean.
Or you can get
I don't know where they came from.
They can mug you.
Yeah.
More inflows into LeBron China.